Car insurance in Australia has gone up by nearly 50% in the last 6 years. And as you might have noticed, insurers haven't told customers why.
Your premium, it went up $745 in the last 12 months.
Oh, jeez. I couldn't believe how much it'll cost me per month to insure the car.
They just pulled these numbers straight out of their ass. They come from nothing. Call and cancel, and I guarantee you'll save hundreds.
It's only one of the reasons why our main financial regulator has just put car insurers on notice. I'm Samantha Selinger-Morris, and you're listening to the Morning Edition from The Age and the Sydney Morning Herald. Today, National Consumer Affairs reporter Elias Visontay on inside tips to get lower insurance and why drivers overseas are on a better wicket. It's August the 12th. Elias, welcome back to the podcast.
Thanks for having me.
Okay, you have to tell us, how much are people paying on average for their car insurance compared to 6 years ago?
The takeaway figure is that they've jumped by about 50%, which is kind of nuts. You know, a lot of the time when car insurance premiums get talked about, we get figures year by year and, you know, they kind of drown or fade away against all these other price rises we're seeing. But when you zoom out and look at this 50% rise, it's well above what inflation's been across the rest of the economy. Like, this is a serious jump.
Okay, and this tracks with how I feel like I'm getting hammering monthly. But just tell us, like, what is the average price that people are paying?
This is a great question. There's so much variation, it's almost impossible to know, right? I'm sure if you've been insuring a car, you will have had memories of it maybe costing a couple $100 for comprehensive insurance. And I know for myself, I was stunned when I recently got a bill to renew for almost $1,000. And I was driving a tiny, small hatchback. Yeah, just to give you a sense of how wildly different the prices are that people are paying. The comparison platform Finder analysed 26 different comprehensive motor policies and found an $1,871 difference between the cheapest and most expensive providers. And those were the same policy. So, like, there's a huge amount of variation that Australians are facing when it comes time to insure their cars.
Okay, and I guess second to that, you've just written about a new report by the Australian Securities and Investments Commission. Now, this is Australia's main financial regulator, and it has been very critical of insurers over this increase. So what has the regulator said?
So the regulator released this report this week. It's looking specifically at how insurers are communicating with their customers. And the main takeaway is they were pretty scathing of the fact that insurers aren't really doing enough to explain to customers what is driving their prices so much higher. In many cases, they're giving really generalized examples, not going into the detail, and in some cases, not even offering an explanation at all. Now, ASIC says that puts customers in a really tricky position. Without that knowledge, they're kind of in the dark about whether they should be pushing back or whether they can be shopping around for a better deal.
Okay, and I really wanted to ask you about this because you've written, tell me if I've got this straight, did the ASIC essentially find out that time-poor customers are effectively taxed for their loyalty to an insurer? Like, if they don't push back, they just keep paying higher premiums, but those that push back actually do find that the insurer sort of stops raising the price?
Yeah, this statistic really jumped out at me. But basically, they surveyed, I think it was 2,000 Australians with motor insurance, and 31% of people, basically a third, all they had to do was just call up their insurer they're already with, say they weren't happy with the price, and they were readily offered a discount. Obviously, there were many other ways people could save by shopping around. But I think what the ASIC's getting at here is there does seem to be a bit of give in the system that when people are getting these renewal notices or quotes, they're not the best price that customers can be paying. I think it really raises questions about some of the things we've been hearing from the industry. I think it's quite acknowledged that there has been, you know, a rise in the cost of providing insurance to Australians. But given just how easy it does seem to be for some of these insurers to be dropping their prices very quickly, it raises questions about whether that rise in premiums we were talking about, that 50% over 6 years, really represents the true cost of what these insurers have been facing.
Okay, well, so to that, I've got a two-part question for you, which is that because this would all suggest, at least to me as a layperson, that insurance companies do not have to increase premiums. So I guess, what do you say about that? And also, what are insurers saying about why their premiums have increased?
Yeah, look, I don't think it's in dispute that just like across the entire economy, prices for a lot of things have been going up. And so I went to the Insurance Council of Australia as part of writing this story, and they said that, look, according to their data, motor claim costs were up 47% since 2020. So that's quite a lot, not quite as much as we've seen premiums rise. But I think what a lot of people agree on is that the type of cars that are on Australian roads that people are insuring have become much more expensive to insure. The two big factors in that space are probably the fact that Australians now drive SUVs as the main car. I think 10 years ago, about 37% of new car sales were SUVs. Sedans were still the most popular vehicle. In 2026, last month, SUVs accounted for more than 65% of new car sales. So Australians have really kind of fallen in love with these bigger vehicles. That's just more metal, but also more componentry. Increasingly, our cars are more teched up. We've got, inbuilt touchscreen systems, other sensors. All of those things not only make for a higher cost price for a vehicle, but so much more that can go wrong, and in the event of an accident, so much more that needs to be repaired. The other big thing driving this is electric vehicles. Electric vehicles, as most people will know, have been much more expensive to buy up front, and they present a whole range of challenges to insurers when someone gets an fender bender and needs them repaired. An example of this is traditional mechanics aren't equipped to do things like de-energize a battery, which is required when you're working on an electric vehicle. There's a whole range of those electric-specific skills that Australia's workforce of mechanics need to be skilled up in. And with that shortage of skilled mechanics, it's just added to what has become an incredibly costly line of vehicles to repair. That's happened as Australians have been buying so many more electric vehicles. Even before, the kind of recent spike related to the Strait of Hormuz fuel crisis, electric vehicles had become increasingly sought after for their ability to save money in the long term by climate-conscious drivers. And so insurers are looking at those two trends and they're saying there's a lot more risk on our roads. If these vehicles get into accidents, it's going to cost us a lot more to repair them.
After the break,
There's evidence that insurers are able to basically judge what our behavioural tells might be, what our likelihood is to shop around, what our likelihood is to just accept whatever their new quote is.
and you mentioned the Strait of Hormuz there, which brings me to my next point. Can you talk to us a little bit about how the global market and all the volatility that's happening around the world could be playing into this as well?
Yes, I think it's very easy in Australia to think we're isolated and we exist in a bubble here, but our insurance market's very much shaped by these global factors. The other big thing here is the huge uptick in natural disasters and weather-related events that have been a nightmare for insurers. As a result of kind of wanting to hedge their bets on that risk or not risk losing hundreds of millions of dollars in the event of a particularly bad storm, say, there's a whole industry kind of called reinsurance that exists, which is basically where insurers go to get insurance to kind of reduce their own risk. And that's for these really kind of big scale catastrophes. But what we've seen with all these changing weather events is that the cost of providing that reinsurance is growing. And as a result, our insurers, who we as Australians are dealing with to reinsure our cars, they're facing higher costs when they have to cover themselves. And so even though it might seem like, how does a storm, a particularly bad one in, say, America, affect my car insurance in Melbourne? The reality is insurers have to spread these costs and these risks across all of their offerings and all of their businesses. So yeah, in a way, those factors, war in the Middle East and the kind of worsening climate events we're seeing around the world, they're all adding to the cost of your premium for your car too.
Okay, so you've waded through all this information on both sides, on the consumer side, on the insurer side. Now, I guess help us cut through this, because ASIC says insurers are overcharging. Insurers say, oh, hey, wait a minute, there's all these factors that, are forcing us to increase our premium. So which version is the closest to the truth here, Elias?
I think with all questions like this, it's probably somewhere in the middle. As we've gone through, there's just been an undeniable rise in the cost of insuring our cars. But I think it's really telling, as the ASIC said, just how willing and ready insurers are to discount at the fear of losing you. And I think this talks to a greater point about just how advanced some of the systems are, the algorithms that deliver our quotes to us and price insurance for us. We think what makes up our quote should be about, if you're going online to get one, you might put in risk factors like your age, where you live, how many accidents you've had. That stuff, I think, has been acknowledged as pretty fairly influencing how much your insurance should cost. But what we may not realize is that insurers are able to figure out so much more about us that we might not be giving in those questionnaires. And there's evidence that insurers are able to basically judge what our behavioral tells might be, what our likelihood is to shop around, what our likelihood is to just accept whatever their new quote is. That can come from a whole range of insights, like where we are in life, whether we have a family, also our purchasing behavior in the past. So I think given that we know this ecosystem exists, and there's countless examples of evidence that Australian insurers are using this kind of analysis to give us a quote, I think it's pretty fair for Australians to think, hold on a sec, are these prices really the best I could be paying?
Yeah, I think a lot of us are asking that. And I wanted to ask you, I guess, about our overseas counterparts, because vehicle drivers in the US and the UK, they've also been experiencing car insurance price increases, right? But at face value, at least, there seems to have been more action from their lawmakers, as opposed to ours, to fight against this. So can you just tell us a little bit about that?
Certainly, yeah. All of those factors making it more expensive exist overseas. The key thing, I guess, is what governments have done. In America, some of those tactics I was talking about, where insurers might offer a different price based on your behavior or what they can infer about you and your likelihood to renew or just accept a new price, certain states have actually outlawed the use of those practices. And when we look at the UK, I think this is a key one, this idea of a loyalty tax, right? The fact that an insurer might be outwardly saying, we treat our customers, we treat our loyal customers and we reward them for their loyalty. We've seen it get to a point there where the government has stepped in and essentially you're not allowed to offer someone a different price on the same policy just because, say, it was an offer designed to incentivize people to come on over and join up. You're not allowed to differentiate in that way. But when we look at the Australian market, there's very few kind of rules and forces here stopping motor insurers from doing these types of things. And it stands in stark contrast to some of the other insurance markets in Australia that are pretty heavily regulated. For instance, the motor insurance industry here, there's no cap, say, on how large a premium rise has to be year on year. Insurers are also able to charge you more if you choose to pay by month instead of by year. Even other parts of the insurance landscape to do with cars. Every state has something called compulsory third-party insurance. That's basically not to do with damage to a car, but injury or death in the event of an accident. That's heavily regulated state by state. But all of those guardrails and rules and processes, that doesn't apply to motor insurers for comprehensive policies.
Interesting. And I just wanted to go back just a moment to the practice that you spoke about that's been banned in the US. I mean, what sort of methods are they using to determine customer behavior? Like, are they using AI to troll people's lives?
in a nutshell, it's really tough to know the extent to which this kind of behavioral analysis of us is going on. Insurers aren't super forthcoming with it, but there's some really interesting chats I've had with people in the industry that suggests it's much deeper than you think. So I think we talked about that example before about if you're a busy family, you're probably likely to just accept a bill. You know, you've got them coming in at you from every direction. You just do it. You don't think you have the time to shop around. Some of that data from ASIC really backed that up. Apparently, when faced with an insurance premium rise, 67% of the people they surveyed just cop it, just stayed. And given we don't have those laws that exist overseas kind of banning this deep level of customized quoting, it's really tricky to know just how far insurers are taking it. You know, I was speaking to an industry source who said purchasing habits of customers could be something that companies can get a hold of as data is sold around the economy. And something as novel as their likeliness to buy chickpeas from the supermarket. That could tell an insurer that this is someone who makes their own hummus, which they would associate with someone having plenty of free time on their hands. That might mean they're much more likely to shop around or call up and push back on a renewal increase. So look, it's really kind of a Wild West new frontier out there. But bringing this all back to the findings, you know, this 50% increase, what you can do to reduce your motor insurance bill. There are certainly things like buy a smaller car, or if you need a car with a bit more oomph, something that's a bit more suitable to where you live. Electric vehicles obviously save you money on running in the long term, so there's probably not a super strong argument to avoid buying them. But I think if we bring it back to this advice from ASIC, there's really strong evidence that just pick up the phone, give them a call. You stand a really good chance of getting a discount.
That's really it. Aside from perhaps buying your own chickpeas.
Yeah, exactly. You know, drop any hint you can to any data analysis out there that you've got time on your hands and that you like to kick up a stink. That'll probably help you too.
Well, thank you so much, Elias, for your time.
Thanks for having me.
In other news today, property prices could slump by almost 15% over this year and next, economists have warned, citing interest rates, low levels of affordability, and the federal government's property tax changes. Commercial fishing is removing at least 2.2 million kilograms of fish and other sea creatures from Australian marine parks, using controversial practices such as bottom trawling and longlining. And after scanning the brains of dogs, scientists have found that they are excellent at reading and responding to human emotion, even better than our closest evolutionary relative, the chimpanzee. You can read more at theage.com.au or smh.com.au. Today's episode was produced by Tammy Mills, and our podcasts are overseen by Lisa Muxworthy and Tom McKendrick. If you like our show, follow The Morning Edition and leave a review for us on Apple or Spotify. Thanks for listening.